Welcome. In this video, what will happen to the price if XCN is listed on Coinbase? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. One of the structures that investors pay the most attention to when doing technical analysis in the market is trend lines. In particular, a long-standing downtrend that keeps suppressing the price is often seen by investors as a chain, a barrier, or a boundary. Each day the price stays under this trend line, the pressure on the market becomes more palpable, and some investors may lose confidence because of it. At the same time, however, the presence of such a major downtrend often lays the groundwork for a much stronger upward move when the breakout finally happens. Because when this line that has long suppressed the price breaks, not only a technical barrier, but also a psychological one is shattered. The repetitive perception in investors' minds of the price always goes down, it can't break above this trend, suddenly disappears and is replaced with the thought of a new era is beginning. This shift in mindset increases investors' appetite to buy, which accelerates the upward move in price. The most important feature of downtrend lines is that they represent the price consistently making lower highs. In other words, with each attempt, the price remains below the previous high, showing that sellers are still in control. When the price breaks the structure, the dominance of sellers ends and buyers start to take control. This is why breaking a major downtrend is not only a technical turning point, but also a psychological one. The pessimistic atmosphere that has long dominated the market clears, and instead, an optimistic bullish scenario starts being discussed. Most investors, upon seeing this breakout, think the seller's strength is broken, now it's the buyer's turn, and they take action. For this reason, the breakout of a downtrend is usually accompanied by an increase in volume. As new buyers enter the market, investors who previously saw the trend line as resistance and sold also close their positions with the breakout. The simultaneous effect of both new buying and closing of old selling positions causes the price to rise rapidly. Such breakouts are often the beginning of an attack. That is, once the price breaks above the trend line, it can quickly accelerate. The reason is that the balance in the market shifts. During the downtrend, sellers are in a strong position, but after the breakout, the power dynamic reverses and buyers gain the upper hand. Especially large investors and institutional players pay close attention to these trend breakouts and see them as opportunities, because the end of a long-standing pressure in the market is a sign of larger future rallies. That's why the attack that begins with the breakout of a downtrend may not only be a short-term bounce, but also a signal of a long-term upward trend. On the other hand, breaking such major downtrend lines is usually not easy. Often the price approaches this trend line multiple times, tries several times, and gets rejected each time. This process is a test of patience for investors. With every failed attempt, the pessimism in the market grows stronger. However, this situation actually increases the power of the eventual breakout, because every time the price approaches the trend line, it shows that the seller's strength is weakening. When the breakout finally happens, all the energy that is built up is released at once, and the price surges upward much faster. That's why investors often describe such breakouts as the explosion moment or the beginning of an attack, because the rallies that follow a breakout go beyond an ordinary move and mark the beginning of a strong trend reversal. Another important point is that in these major downtrend breakouts, many investors who experienced losses in the past start buying again. Investors who are stuck in a long downtrend may have accepted their losses and left the market. When the price breaks the downtrend, some of these investors want to re-enter the market because they fear missing out on the new rally. This psychology is called FOMO, or fear of missing out. The entry of new buyers due to FOMO further accelerates the rally. Therefore, a downtrend breakout carries great importance not only technically, but also psychologically. However, after a trend breakout, another thing investors must pay attention to is the confirmation process. Often after the price breaks the trend, it pulls back for a while and retests the broken trend line as support. When this test succeeds, meaning the price manages to hold above the line, the probability of the rally continuing strengthens. This process provides a solid foundation for the attack to continue. Because investors not only see the breakout, but also see the confirmation that the price is holding above the line. This further increases confidence, and the rally continues much more strongly. In conclusion, the breakout of a major downtrend line is not just a technical event. It is a moment when the psychological balance of the market shifts, and investor sentiment evolves into something completely different. The attack that begins with the breakout often signals that the market is entering a new bullish phase. With the end of the long-lasting pressure, buyers gain confidence and the path for the price opens. That's why such breakouts are among the most closely followed and most important moments for investors, because every major rally story often begins with the breakout of a downtrend. When the price breaks this barrier, it's not just the lines that change, the spirit of the market changes too, and this shift in spirit becomes the signal of a new bullish wave. but we can't rely on trend lines alone to make an analysis. So let's also take a look at the other metrics. Stay tuned. In technical analysis using Elliott waves, the third wave is generally considered the part investors pay the most attention to, as it's where the strongest rallies usually occur. The first wave is often just the initial stirrings in the market, a quieter stage when most buyers haven't noticed yet. The second wave is typically a corrective phase, when investors are uncertain and the price falls again, though this decline usually does not go below the bottom of the first wave. Once these two waves are complete, the third wave comes into play, and it is much stronger than the others in terms of both volume and momentum. That's because by then, the market recognizes that the uptrend has truly begun, and a broader group of investors start buying in. This leads to a rapid and powerful increase in value. If, after the second wave, the price moves into the third wave and rises to the 2.272 level, this would mean a 400% increase, a very significant potential return for investors if it happens in a short period of time. According to Elliott wave theory, third waves often extend to 1.618 times, 2.272 times, or sometimes even higher than the length of the first wave. The 2.272 Fibonacci extension level specifically marks the target area for the third wave. If the price moves toward this level, it signals that the market is experiencing extremely strong upward momentum. This momentum is driven not only by technical analysis, but also by fundamental developments. For example, if a coin gets listed on a major global exchange like Coinbase, that could be one of the strongest fundamental catalysts supporting the third wave scenario. Coinbase is a US-based exchange that complies with regulations and has millions of active users worldwide. Being listed on Coinbase signals increased trust in the project, regulatory compliance, and broader market access. Both retail and institutional investors see this as a very positive development. Therefore, a listing on Coinbase can accelerate the upward movement of a price that's already technically poised to enter the third wave. At this point, a 400% increase scenario is not just a speculative prediction, but becomes a probability supported by both technical and fundamental analysis. In Elliott wave projections, third waves often show the highest momentum compared to other waves. The first wave is only the beginning, often unnoticed by most investors. The second wave brings selling pressure and hesitation. But in the third wave, new buyers join the market, news flow turns positive, volume rises, and the strength of the trend becomes clear. A fundamental catalyst, such as a Coinbase listing, can amplify this stage, driving prices upward even faster toward the 2.272 Fibonacci extension. From an investor psychology standpoint, the third wave is also when FOMO, the fear of missing out, is most intense. Many investors see the price rising, realize they missed the second wave dip, and rush to enter during the third wave. This further increases buying pressure and helps push the price rapidly toward the 2.272 extension levels. Here, it's not only technical rules at play, but also the human psychology that drives markets. When the third wave and a Coinbase listing converge, the result is even stronger. Being listed on an exchange doesn't just expand access to new investors, it also multiplies the project's visibility in media and on social platforms. Every new listing announcement spreads quickly across the crypto community, trends on social media, and is shared by thousands of people. This kind of environment further fuels expectations for the third wave. If the price has already turned up from the second wave and is preparing to enter the third, this catalyst can drive it swiftly to the 2.272 level, making a 400% rally very likely. Another key characteristic of third waves is not only price growth, but also a clear rise in trading volume. Volume shows that the market is moving in a healthy way and that the rally is strong. With a Coinbase listing, new users join existing investors in buying, creating a sharp increase in volume. This volume surge confirms how powerful the third wave can be. Rallies without strong volume often fade quickly, but those supported by major news like a Coinbase listing and backed by heavy trading activity can signal the beginning of a long-term trend. From another perspective, the combination of a third wave and a Coinbase listing creates a sense of trust in the market. Coins listed on Coinbase are generally those that have passed certain criteria, face no regulatory issues, and are seen as safer for investors. This accelerates the inflow of new buyers. As investor confidence grows, selling pressure decreases, buying strengthens, and the prices move toward the 2.272 level becomes much easier.
Taking all of this into account, when the market enters the third wave according to Elliott wave theory, reaching the 2.272 level, a 400% increase is both technically logical and highly probable when supported by fundamental developments. A Coinbase listing strengthens the third wave and helps the price reach these targets faster than expected. In this scenario, investors can form a much clearer bullish outlook by paying attention not only to technical signals, but also to overall market sentiment, news flow, and developments on major exchanges.
The listing of a cryptocurrency on a large, globally recognized exchange often has an extremely strong impact on its price. If XCN were to be listed on Coinbase, one of the largest and most trusted exchanges in the world, this would not only create short-term price increase potential, but also establish a lasting demand foundation in the long term. Coinbase is a US-based platform that operates in strict compliance with regulations and has millions of active users. Therefore, every crypto project entering this exchange is placed in a much stronger position in terms of legitimacy and reliability. It has been observed many times that Coinbase listings have caused significant spikes in a cryptocurrency's price chart and greatly increased investor interest. A similar scenario is likely for XCN. In particular, the fact that this coin has previously reached an all-time high, ATH, and is still below that level strengthens the likelihood that a Coinbase listing could help the price surpass its previous peak. In investor psychology, both new and existing investors share a common perception. Being listed on a major and reliable platform increases trust in the project, multiplies trading volume, enhances liquidity, and provides the foundation necessary for upward price movement. Breaking the ATH does not just mean surpassing the previous peak, it also signifies entering a new price discovery phase. When the price reaches previously unseen levels, there is no resistance above it. The only obstacle is potential profit-taking by investors. A Coinbase listing for XCN would attract global investor attention. Many investors previously had no opportunity to purchase this coin because they only use Coinbase. As this audience enters the market, a significant wave of demand will emerge. Limited supply combined with increased demand will push the price higher, and as the price rises, more investors will gain confidence in the project and join. This creates a chain reaction, allowing the price to quickly climb toward its previous ATH and then break that level to establish a new peak. Additionally, a Coinbase listing sends a strong signal not only to individual investors, but also to institutional investors. Institutions typically prefer to trade on compliant, secure, and transparent platforms. Coinbase is known for these qualities. Therefore, listing XCN on this platform would also help gain institutional-level trust. The entry of institutional investors usually pushes prices upward in a more stable and sustainable way. While individual investors may create short-term volatility through trading, institutions mostly hold long-term positions. This allows a new upward trend to develop more strongly and sustainably. The possibility of forming a new peak does not depend only on technical factors, but also on fundamental developments. A Coinbase listing increases confidence in the XCN project, generates more media coverage, amplifies investor interest on social media, and accelerates community growth. In the crypto market, hype and attention are crucial. People buy not only because the price rises, but because a significant development occurs. This development could be a listing, a partnership, or a product launch. A listing on a platform like Coinbase is one of the strongest hype-generating factors. As a result, the price may not only surpass its previous peak, but also reach entirely new price levels. From a technical analysis perspective, breaking past previous highs usually signals the continuation of an upward trend. When an asset exceeds its historical high, trust in it increases and new buyers enter the market. In the price discovery process, it is difficult to predict how high the price can go because there is no technical resistance. This allows the price to rise much faster in a short period. In the case of XCN, a Coinbase listing is one of the most important developments that could trigger this process. Furthermore, there is a phenomenon in the crypto market known as the Coinbase effect. When an asset is listed on Coinbase, it often experiences not just a short-term pump, but also medium and long-term sustainable value gains.
This effect is further strengthened by factors like secured wallet integrations, staking or reward programs, and institutional customer access. Therefore, for XCN, a listing is not just an addition, but also brings secondary effects such as increased ecosystem participation, a larger user base, and multiplied trading volume. This can open the door to a new upward trend following the ATH breakthrough. In conclusion, a Coinbase listing for XCN will increase the project's visibility, boost investor confidence, multiply trading volume and liquidity, and most importantly, attract new investor audiences. With this chain reaction, it is highly likely that the price will surpass its previous ATH. Once the peak is broken, psychological barriers will be removed, and the price will begin testing new levels. With both individual and institutional investor interest increasing, the likelihood of XCN establishing a new peak becomes strong. A Coinbase listing is not merely a development, it is a turning point. Such a development can lay the foundation for price movements to rise faster, stronger, and more sustainably.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.